Hi, and welcome back to the Infinite Dividend Hunter. In this episode, I have 2 weeks worth of updates to go over with you. I was out of town last week for Mardi Gras, so wasn't able to make a video. So stay tuned to see how the portfolio has been doing. I'm on the hunt for an infinite stream of dividend income. This video series documents my plan to turn $1,000 of Robinhood's money into $1,000 of my money. But remember, I'm not a financial professional, and nothing in this video is financial, investing, or tax advice. You have to do your own research for your investments. Let's get started. Last week was a green one for the portfolio, with an ending balance of almost $2,060. But this is a bit deceiving, so let me explain. When I joined Robinhood in 2025, I signed up for Gold and was asked to put on the wait list for the Robinhood Gold credit card. You have to be a Gold member to have the card, which costs $50 a year, but I'm already a Gold member, so I wanted to add it to my wallet. It offers unlimited 3% cash back into your brokerage, which is really good for a credit card. So almost a year later, I finally got notification that I was off the wait list and could apply for the card, which I did and was immediately approved. During the sign-up process, I moved the $50 yearly payment for Robinhood Gold from a debit to my brokerage to just being placed onto the credit card. And this created a little bit of confusion. I still had several months left of my current Gold membership, so they gave me a prorated refund for the amount left on this year's membership and started a new membership on my Gold card. This led to me being credited about $15 in the account that you're looking at. I'm going to have to confirm that this is the case, but it's going to create a little bit of an issue keeping things straight because now I have an additional $15 and change in buying power. I'm going to have to think about how I want to handle this refund in this account, but it may be just something I have to keep track of manually. By the way, if you're interested in having a Robinhood account and you don't have one and you'd like a referral code, send me an email that I'll post in the comments below. I get a fractional share of something and you get a fractional share of something as a reward. Over the last several episodes, I sold a few of my ETFs and replaced them with others, hoping to add a little more NAV stabilization. The first thing that I did was get rid of COIW and replace it with BLOX. Crypto has had a rough several months, and I'm hoping I'm getting in a little bit at the bottom with BLOX. In addition to my COIW shares, I also sold my HOOW shares and invested those proceeds into BLOX. The value of my COIW and HOOW shares had gone down so much, it just seemed to make sense to combine them, and at this point I think I'm going to stick with that. I thought this was interesting from a price return standpoint based on when I sold my COIW shares on January 29th and purchased blocks. I've plotted their price returns on a graph along with the price of Bitcoin. Blocks down about 19%, COIW actually a little better by a few tenths of a percent, and Bitcoin doing the worst of the three. Now let's take a look at total return. Here, blocks has a slight advantage. COIW is in the middle and Bitcoin is the worst. This is a small sample size, but right now it doesn't look like my switch to blocks has made much of a difference. In this graph, I've replaced COIW with HOOW, and I've changed the time frame to begin on February 5th, which is the date that I sold my shares of HOOW and used the money gained to purchase blocks. I kept the Bitcoin price up just for comparison purposes since we use that with COIW. For price return, blocks has been a winning move. It's up over 9.5%. HOOW is up about 5.5%, and Bitcoin is down about 3.75%. Let's take a look at the total return for this group. Again, blocks is doing better than HOOW, up over 12% compared to HOOW's 7%, with Bitcoin still being in the negative. So in this really short time frame, my move to blocks has been a net positive, doing a little bit better than COIW and about 5% better than HOOW in total return. On February 5th, I also sold out of my SNOI position and purchased Chippy. Here's a look at the price return during that time period. And surprisingly, SNOI is up 7% compared to Chippy's 6.15%. I also added QQQ for comparison purposes, and it's up about 2% in price return. If we look for the last month, you can see that it's kind of stabilized. I ended up selling around this time period, around the low, and it's just a little bit above that now. So it's never great to sell at a low, but I also bought Chippy when it was down, so it kind of evened out. How do these stack up in total return during this short period? Pretty close. SNOY is up about 9%, Chippy about 8%, and here again the Q's about 2%. So although things are pretty even right now, SNOY has outperformed Chippy so far. But SNOY has been having some real problems. If we go back and look at the 1-year graph, the high has been around $18, and we're currently around $8 to $9. Let's take a look at Chippy in that time period. On the 1 year, we have a very different looking graph, up and to the right generally, starting off around 47 and ending around 60 or 61. I'm still holding on to my Granite Shares NVYY ETF that tracks NVIDIA. Here's a look at the price return for NVYY, NVIDIA, and the Qs year to date. NVIDIA is up about 1.75%, NVYY down almost 11%, and the Qs down about 1%. Again, this is price return. But of course, we need to check the total return too. In this graph, NVYY is winning, up over 3.5%, but its price return has dropped significantly compared to the others. And this is the trend that worries me with this ETF. I'm still on the fence about what I want to do with it, if I want to keep it or trade it out for something else. The yield has been great, and we'll get to the dividends in just a minute, but the price return just continues to fall. I have 2 weeks of dividends to share with you, and we'll start with NVYY. Both payouts were very similar, only about 7 cents difference, and they both represent about a 95 to 100% annualized yield. I split both of the dividends in half, invested half of those into SPY, my forever fund, but I've still not reinvested the other half back into NVYY. Everything you see here in red, that totals up about $11.76, I have not reinvested. Like I mentioned earlier, I'm still weighing my decision on whether I want to pick a different fund. Both of the blocks payments were about 11 cents and just shy of $1 each. And unfortunately, when I split those in half and add them together, they're less than $1. So I still need to wait to receive next week's dividend to add it to these before I can reinvest it back into blocks. The other half has already been invested in SPY. And both of these represent about a 36% annualized yield, which is what blocks is aiming for. I no longer have any HOO dividends to discuss. I received 2 almost identical dividends from Chippy, and these represent about a 45% annualized rate of return. I did run into a snafu with my dividend reinvestment. For the first distribution, everything went normally. I turned off the dividend reinvestment so that it didn't automatically process. But for some reason this week, the DRIP, or Dividend Reinvestment Program, was back on, and it invested the entire $1.45 back into Chippy before I noticed and had a chance to turn it off. So Chippy got a little bit of a boost this week at the expense of SPY. And I did get my monthly SPY dividend. I haven't had a chance to reinvest that yet, but the entire $1.79 will be invested back into SPY. And this is about a 12% yield, which is what SPY is aiming for and what I'm happy with. And here's my total return summary. The blocks position, which was previously COIW, HOOW, and MISTY, has a long way to go. It's down about 74%, which is just brutal. Chippy and NVYY aren't looking great, but do look a lot better compared to the others. So the original position of 4 high-yield ETFs is down about 50%. Offset that with the SPY position, and the total portfolio is down about 32%, which has kind of stabilized in the last couple of weeks. I haven't seen as many gigantic swings that I did from COIW and HOOW. And that's the point of why I traded out some of these ETFs. I'm giving up some of that high yield for some NAV stability. I am happy with my SPY position. I have almost 3.5 shares. If you enjoyed this episode, I'd really love it if you like and subscribe. And remember, nothing here is financial, investing, tax, or any other kind of advice. I'm just inviting you along my journey. And if you'd like to learn more about my small account margin strategy, check out the first 5 videos in the series. Good luck hunting those infinite dividends. Take care.